introduction. Today, as you would have seen the webinars, a little bit about what you should look for in a business. As Kerry said, I've been part of a tradie's lifestyle since I was born, in fact, through my father and then my brother, and continued that right through. And in fact, my father still owns a business today at 76. No longer out on the tools, obviously, but still very keen in all matters business. So we still talk a lot about business, probably more than personal stuff, and I'm sure guys out there who are in a small business in particular know all about that, that business becomes all-consuming. So today, just to frame up what we're going to be addressing, we're going to have a look at the state of the nation a little bit. Census do a very good survey that they post out every year, and these are the December 2016 results, or all of 2016. So we'll have a quick look at that and how that might relate to the trades industry and for the members of HIA. We'll see if that affects your business, or start thinking to yourself, does this affect my business? Is this me? Am I one of the worried businesses, or am I one of the businesses that is doing fine? And of course that also depends on where you're located in this nation of ours. We'll show a little bit of how technology can help. Obviously, as a technology provider, we'll use a reckon tool today to show that, but today's really not about technology. It's not about what you use to achieve these results. Maybe you're still using a spreadsheet, maybe you're pencil and paper. So it's about just putting technology front and center, hopefully showing you a little bit around that it's not scary and it's not that hard to do, but definitely showing you how you can streamline and gain some further insights into your business as well. And then we'll just finish off with an initiative that HIA and Reckon have put together as part of the member services for you guys. I should point out too that my father was a card-carrying HIA member for a number of years. He's dropped it now and that he's in semi-retirement, but we know the HIA very well on a personal level. Okay, so as I said, we're going to review just quickly the Census business review. A number of businesses were reviewed, 65% metro, 35% regional, and primarily in that 1 to 19 employee space, so 90% small businesses, which is most likely the target area or the target market that we're talking to today. So just in a snapshot, what did small businesses, so SMBs, tell us during the year? So 61% of people are feeling confident, or businesses I should say, and they're primarily putting that down to being an established business, so running for a number of years, have a good customer base, have good methods, good processes, and that obviously ties into business strengths. 15% of us still feel worried. Sales are always challenging. Picking up that next job, picking up a job that's profitable is more important, and we'll look at that a little bit later as well, talk about it a little bit, and unfavourable business conditions or environmental. So if your business is tied to the mining industry, for example, probably not doing so well. If you're up here on the Gold Coast where there's a lot of activity around the Commonwealth Games, for example, and a lot of expansion, you're probably doing a little bit better perhaps. But overall, businesses has increased over the last quarter, up 8 points to a 46%, which is kind of middle ground. We're doing okay. So my favourite, building and construction. So confidence is all over the shop, as you would imagine in this industry. Many of us ride the highs and lows of what's happening globally and as a nation, and indeed in our own neighbourhood. Also with staff is always challenging as well. Sometimes business goes up and down with the quality of your staff, just the ability to get staff, for example. So the purple line is our industry, or your industry I should say, and it's tracking at about 39. So overall it was 46, so building construction confidence, as you can see, a little bit flat this year, or 2016, and just a little bit below national. So what are the primary concerns for you guys out there? So lack of work is always going to be front and center. That's the main thing, isn't it? Whether you're selling retail products off the shelf or you're out there in the service industry, like the majority of HIA members, it's always about where that next job's coming from. So 13% of people or businesses worried about that. Competition's an interesting one. I know from my own experience, competition was never really an industry issue. There was good guys, there was bad guys. The good guys tended to get the work. But now with social media, and we'll delve into that a little bit further, there are more challenges out there. Exposing yourself to the customers and, of course, the right customers, and we'll talk a little bit about that. Finding and keeping staff, that's my personal biggest bugbear. It's one of the reasons I got out of the industry, and it's still a worry. Paperwork and bureaucracy. So today we'll show a little bit around how simple it is just to manage some of this stuff. There's obviously new challenges in the industry with the TPAR regulations and what we need to report there with subcontractors, but it's just a paperwork nightmare and a bureaucracy nightmare, as we all know. Even a simple BAS return, can take hours to correlate all that data and send off. The economic climate goes without saying. Cash flow, I believe Kerry had a recent webinar for HIA, and cash flow was actually flagged as one of the main concerns. And again, we'll talk about that a little bit and what cash flow really means. And taxes, only 2%, so that's great. We're obviously undertaxed as a nation and we could all pay more. So bear that in mind next time they decide to push up the GST, or when they do decide. So business is changing. I mentioned previously digital disruption, and that's online presence. And that's becoming more and more prevalent. There's more and more tools out there to select the tradesman, get the right tradesman, but also have a visibility into what other customers thought about that tradesman. If I'm getting a pool built at the moment, for example, we went through word of mouth, who had a really good experience, a couple of friends of ours, but we actually went online and looked at online reviews, and they were really bad. So previously it used to be word of mouth. Now you can look at, I think this particular pool builder had about 80 reviews, and some of them weren't that flattering, which actually made us think twice about using that builder. And in fact, we're looking around at another one at the moment. Changing workforce. Guys want to be more flexible. It probably will touch our industry one of the least. It's pretty hard to work from home if you're a painter. However, guys are looking for more flexibility. It's not about just paying them the award or a little bit about the award. It's around what extra benefits can you offer those guys? Can they do a Saturday morning in lieu of taking Friday afternoon off to go to footy training? Are you a flexible owner and manager of the business? Legislation and compliance, as I mentioned, TPAR, now for reporting on subcontractors. In the future, the government definitely will bring out a concept called single touch payroll, which means basically as soon as you run your payroll, you'll need to report your pay-as-you-go withholding and super contributions to the ATO. And in fact, it might go as far as you having to pay your pay-as-you-go contributions and super when you pay your pay. So at the moment, if somebody's gross salary is, say, $1,000 a week, you would take off the tax, let's say $200, and you'd pay that person $800 net. You'd worry about the $200 in 3 months' time, and you would worry about the 9% super in a month's time or 3 months' time, depending on what fund you're with. So it helps with your cash flow. It can also hurt your cash flow because, as we all know, when it comes time to pay that stuff, you may not have it on hand. But definitely in the future, and other countries close to Australia in our methodologies have gone this way, where you'll pay your pay and you'll have to pass on that pay-as-you-go withholding and super possibly at that particular time there and then. So you can imagine how that will affect your cash flow as well. And clients want more. So again, online reviews, they expect, tradesmen to be held to a higher standard. Just as your employees want you to be flexible, clients expect you to be flexible. They're working longer hours. Maybe they want you to come and do your quote after hours, not in the middle of the day when they're not home. We're just demanding more and more as a society, goes without saying. So this was an interesting one that we pulled from an online review, which was around media presence and social media presence. So these are all industries, and as you can see, going from 2011, which wasn't that long ago, right up to 2016, there's been a real jump in businesses having a social media presence, and that could be a number of forums that we'll look at in a moment. So we're just up below 50% there. So these are the industries broken down. Cultural and recreational is quite high, and that's, you know, again, based on the industry that it's in. So that might be a coffee shop or a hire business or something like that, hiring out in the tourism industry. You can see down the bottom here, building and construction, it's been fairly low. Last year's, almost doubled to 32%, but still the lowest out of all industry sectors, which is interesting. And these are some of the culprits. So high pages, I don't know if you guys are listed on high pages or have used high pages. A lot of guys in our office have actually used high pages to get a good quality tradesman that's been recommended by other people. Facebook, builders, painters, electricians having their own Facebook page, again, sharing content, jobs they've just completed, because consumers, especially educated consumers, are looking at all this stuff before they make their decision on who to task with a job. Airtasker, don't know if you've seen the ads on television lately. You can basically air task anything from cleaning a drain to fixing I saw one this morning actually when I was on their website, just unblocking a washing machine hose, which you would think would be fairly simple, but you can just go on Airtasker and get someone out to do that. So taking away that sort of handyman aspect of it where you don't need to be qualified perhaps. And the dreaded review summary on the right hand side. So this could be Google reviews, which is most likely the most prevalent, but High Pages has reviews, Airtasker will have reviews, you can review things on Facebook. Lots of platforms now have a review mechanism where the public can go and rate you. So these guys have had 302 reviews. 4.3 is actually very good, but you'd be looking at that one star and 2-star reviews and going, well, what was that actual problem? And for us, as I said, with this pool builder, he only had a couple of negative reviews, but they were quite bad. And as I said, turned us off using that builder altogether. So how do you get around this? There is no way of getting around it, is the short answer. You need to provide good service and be aware that consumers can go and rate you after you've provided that service for them. It's good to engage with them. It's good to follow up. How did you enjoy your experience? If it's not you personally doing it, if it's one of your employees, show them these reviews. Engage with the customers, engage with your employees. No longer can we go into a job and have a bad customer just walk away and both think, well, we'll never deal with that party again. These things can haunt you for years to come. The good news is you can have some of these reviews overturned if they're unfair. I know Kerry was telling me a story about a lady who had a negative review. I think it was against a builder, Kerry. Apologies if it wasn't, but let's just say a tradie. And when this woman's profile was looked into a little bit further, she gives everyone 1-star reviews. So it's like she goes out and finds the worst places and reviews those. Now, obviously, she had a bad experience with this tradesman, but she didn't even get the tradesman to come and do the work. It was only that he didn't turn up to do the quote, and 1-star review, and it goes on your overall score. So we need to be thinking about these things. We could get away with it in the past. We all get busy. Tradesmen are notorious for not getting quotes out to customers, not getting invoices out on time. All this goes into these social media reviews. So today we're just going to go through some ready reckoners for a successful trades business. I tried to look at everything that made our own business successful, but also I had many years as a software consultant and also a bookkeeper. Had about 200 clients on my books. Most of those were small businesses and many of them were tradesmen. So kind of went through what was really key to I guess, consider when you're a small business just to stay alive, let alone, be profitable. So we'll talk about getting greater visibility into your business performance and what that may and may not mean. And as Kerry mentioned, please type away your questions. Kerry will correlate them for the end of the discussion and we'll answer those back to you. So just in the webinar box there's a question area. Please feel free to jot down any comments that you might have and I'll try and answer them where I can. Please bear in mind I'm not an accountant or a financial advisor, so don't ask me anything that is going to get me in trouble, but we can generalise a fair bit. We'll talk about improvements to cash flow. Cash flow is king, cash is king. It keeps your business alive, but you also need to plan for a rainy day. A good friend of mine's a builder, tripped on his son's skateboard, broke his ankle, he was out of work for 3 months. They nearly went under. Wife wasn't working, had to make mortgage repayments. Cash is king, plan for a rainy day. Minimise the financial burden of government compliance, so that's where we'll dive into the software and have a little bit of a look there. And this is one of my favourites, more profitable jobs, which means more profitable customers and a more profitable business by looking at data. Not everyone's favourite thing to do, so we'll talk about the pros and cons there. Okay, so greater visibility into your business's performance. So what does that really mean? We could go on for hours on each topic. We don't have too long today. However, we'll touch on these one by one where we can. And as I said, please ask any questions you need to. So this is a bit of a tongue twister at the top. Money earned less money spent to get the money earned equals your profit. So I'll explain that a little bit more when we look at a profit and loss sheet in a financial software. But what that essentially means is for a financial measure, so what your accountant looks at, what your tax agent looks at, is just the profit, how much you earned this year, okay? And obviously that's the money earned, so the money all of your customers have paid you, less the money that you spent to earn that money. So you can't go and claim things, as we all know, that have nothing to do with you going out and earning that money. You can't claim a holiday to Bali if you weren't going over there to do work in Bali. So profit, as you can see, my first point, isn't always a reliable measure because you can be showing quite good profit but have other expenses that come into play that are actually more important to you, because profit is really just a direct measure of how your business is tracking, or that particular business. Maybe you're running a few businesses. Maybe you're a wall plasterer and your husband's out running a coffee shop during the day. His business could be making a loss, yours could be making money. So again, two different profits, but they're not in isolation. They don't mean that much. We'll have a look at which reports to look at. So I'm going to show you today a P&L. We all should be across a P&L. Maybe it's just something your accountant sends out to you at the end of the year, and like my father, you take a quick glimpse and go, yep, okay, that's fine. Whereas my mother will analyse the details, see where we went wrong, where are we spending money, how much should we spend on advertising, what was our gross profit for our materials, all that sort of stuff. Balance sheet, we'll talk about that a little bit as well. Cash versus accruals. I just want to show you guys, I don't want to get too bogged down in technical detail, but accountants in particular are very good at setting up a business on a certain tax methodology, and you can look at those figures as a business and go, oh, we're tracking fantastically, and they don't mean a thing because it's how you're set up for a tax regime. So I just want to show you how much that can change based on cash or accrual. I'll explain that a little bit. And timely information. Getting a tax return done a year after the financial year's ended isn't going to help you. If you made a $40,000 loss, you're probably out of business by the time that tax return comes out. You'll know about it well before then. And assets versus expenses. So we can touch on that now. A lot of people get confused, especially when I was doing bookkeeping consulting around assets and expenses. Assets don't hit your bottom line in terms of profit. So you could make $100,000 one year and go out and buy a $100,000 car, and your profit line would still stay $100,000 because the vehicle, I'm sure as some of you know, gets put as an asset on your against your business, and then there's a deduction taken for tax purposes every year. So again, pointing back to why profit isn't always a reliable measure. It doesn't include your depreciation. Sorry, it includes your depreciation, but it doesn't include things like loan repayments. And it's confusing to know sometimes when you're looking at a P&L, how good or bad you're going. I know my brother always used to say to me, Mum and Dad are making money, I know they are. Why is their profit and loss so poor? And it's because they're writing down a massive asset. But it's hard to just know that when you're looking at the profit and loss. So it's really important to talk to a financial advisor, talk to your accountant. Don't just get your profit and loss and look at the bottom line. Ask them what it means. How does it all go together? So what we might do is just dive into some software at the moment, and we'll just have a look at a P&L, if I can find the right page. So this is a typical profit and loss sheet. As I said, any accounting package will give you this sort of analysis. The more data you put in, the more you'll get out. And a lot of businesses hate putting data into their accounting software, but at the end of the day, you won't get the sort of analytics that you're after if you don't. So if we dive up here and have a look at a couple of settings. So this is accrual, okay? And you can see here that we're making a loss. So for the financial year, or this year to date, we're actually lost $150,000 already. Looks terrible, right? However, that's not the full story. In a nutshell, the way cash and accrual works is if you're on an accrual-based business, you can write off all your expenses as soon as you get the bill through the door. Doesn't matter whether you've paid it or not. The flip side of that is when you invoice somebody out, you have to declare that income whether they've paid you on your invoice or not. So there's pros and cons for both. Generally in the trades industry, you're on a cash basis because you're buying a lot of your materials up front and getting paid later. So what I wanted to show you, sorry I didn't mention cash, so yeah, cash is the flip side. As soon as you get that bill through the door, even if you enter it into your accounting system, it doesn't hit the profit and loss because you haven't actually paid for it. So cash is based on when you pay it. So if we look here, $150,000 loss for the year. If we go and change this to reporting basis cash and refresh that, lo and behold, 48,000 we've made. And all that was based on was there was a very large bill that went into the system. I think it was around 165,000 that hadn't been paid. So if you're looking at it on cash, you're looking great, but because accrual looks at when that bill was entered, you're actually making a loss. So at some point you're going to have to pay that bill, and that's the gotcha. Just pop back to the presentation. Okay, so we talked a little about, that was cash and accruals. We talked a little bit about which reports. Profit and loss is key. You need to be looking at your profit and loss, but also your balance sheet, which is essentially what you're worth. So we call it equity if you're a sole trader or partnership, which a lot of the guys out there will be. It's what you're worth, but not as a person, only as a business. And again, that's why profit, even balance sheet for an example, is not exactly what you are worth as a person. And as a sole trader or partnership in particular, you know, as opposed to a big building construction company, you know yourselves that it's all tied in together. Your personal bank account and your business bank account, you're probably moving money back and forth all the time. So again, it's about realizing that looking at those reports, look at them in isolation, but then compare it to your overall wealth. We always, for example, in our business, we look at our profit and loss, but then we also add in the things that don't go on the profit and loss that affect your cash flow. And that is things like home loan repayments, or even loan repayments on your business. It's quite possible you could be paying very small amounts of interest but have massive loan repayments. So if you want a true position, you need to run cash flow reports, and that basically shows the money coming in and the money going out. And for me and for most businesses, they are most important. It's amazing how many businesses don't do cash flow reports. Speaking of cash flow, funnily enough. So essentially cash flow is money in versus money out. The technical term's liquidity, whether your business is liquid or not. If you hear the term, well, they're getting a liquidator in, it essentially means that if you added up all their money they got coming in and looked at what they had to pay out, and that's generally things like superannuation, pay-as-you-go withholding, pay-as-you-go installments, supplier bills, you know, trade accounts, all that sort of stuff. If they don't have any short-term ability to pay that back, or even medium-term, then that business is no longer liquid and it can fold. Obviously affects companies a lot more, and directors are directly responsible now for ensuring that their company is liquid at all time. One little thing I left out there is it's not always money in versus money out. If you've got $200,000 in the bank, then you do obviously have a bit of a buffer. So how do we get visibility into all this stuff? It is about entering it somewhere. That could be in a book, but if it's in a book, you need to manage it, add it up, tabulate it, all that fun stuff. But it is around the more effort you put in, the more you'll get out of managing this data. Okay, so that's what visibility means. How do you know what your liquidity is if you don't know what bills you've got owing and when they're owed? Just having them in a manila folder is not a great way to see how many bills you're owed, or sorry, how many bills you have to pay and when they're due. So you might have a Bunnings account, you might have racked up $20,000 for this month and $40,000 for next month. So knowing when they're due obviously helps your cash flow because you need to make sure you've got money coming in to cover those. So timing is everything. Again, putting information in today, so as soon as you get the bill, put it in your system so that it immediately changes your cash flow. You can run a balance sheet report and see what my accounts payable are. And accounts payable is how much money do I owe to people. You can run things called debtor reports and creditor reports. So a creditor report will show you, in 30-day periods generally when amounts are due, and then you can run your debtor report and that'll show you when your customers should be paying you. Now we all know that you're probably more likely to pay your bill to Bunnings to keep your credit or trade account active than you are to get paid by a customer. So managing cash flow, as I've got there, takes effort. It takes effort to put the data in. It takes effort to follow up. It takes effort to keep an eye on your cash position. And look, we're all busy people. I guess the bottom line is you get as much out of it as you put in. So, I personally found this very valuable for myself, my clients, my family's business, just knowing where we were, making sure we didn't go out and spend lofty amounts on some purchase if we had major bills to pay at the end of the month. It's not rocket science, it's all pretty simple stuff. And again, accounting software, which one you decide to use, will all help you manage this. And managing debtors, so that's one of my favorites. Of course, debtors are people that owe you money. Tradies are notorious for not getting invoices out on time, which affects your cash flow. If you're waiting 2 weeks just to get an invoice out, you're probably going to wait another 7 days to 30 days to get paid on that. So the quicker you get your invoice out, the better. But we can go one step further now, and I might actually show you an example of that. In software these days, you can actually set up some nice little tools. And again, this is generally across the industry. It's not just Reckon only. So you can see here we've got a thing called payment services, so Braintree and PayPal. So what that effectively means is when you create an invoice in the software, you can give that invoice to a customer on site, or maybe you email it to them that afternoon, but straight from the invoice they've got the ability to pay there and then. EFT is fine, but they still have to log into their bank account. Maybe they want to pay on their credit card, maybe they want points. These things are all about giving them the ability to pay there and then. And of course, if you're out on site and you just do up an invoice on your mobile phone, because all of this cloud type software, similar to the one we're looking at now, has a phone app, you can create the invoice there and then and send it over, and they'll receive it on their device, or they can look at it on yours and they can enter in their credit card details there and then, and you get paid on the spot. Now obviously there's pros and cons for these type of services. You do lose a little bit in fees, but you need to weigh up what's that worth, getting paid there and then and having to chase up. Obviously if you've got an overdraft, you're losing interest daily as well. So it's a decision to make, but generally what we say as a consultant is you need to give your clients the most options to pay that you can. So number 3 is minimizing the time and financial burden of maintaining business finances. So we all hate this, right? I don't know anyone who loves doing their best unless it's the only time you actually see how well your business is doing. And I must admit, we all complain about, or most of us complain about the time it takes to get all this data together, but it has made businesses look at their financial position and how they're tracking at least on a quarterly basis, because you need to make sure everything's right to lodge your BAS, or at least you should be. Previously, and my parents were no different, they'd do their tax return, 6 months, 12 months, 18 months after the financial year. They get a profit and loss statement back and they go, oh, isn't that great? For 2015, we made this much money and it's now 2017. So the BAS has forced us to look at our financials. I really hope that if you're out there and doing your own BAS, you're running your profit and loss with it, because you should have had your bank accounts reconciled and make sure everything's right. And you need to look at your balance sheet, your profit and loss, your cash flow forecasts. That's all part of just producing a BAS. If you're just going to produce a BAS, then that's just giving the government what they want. It's a really good tool for analysing where you're at. And of course, technology can help with all of this, and we'll dive in and have a couple, some real basics on what that really means. So here's all, well, not all, this is just some. You can see that bookkeeper there, could be the tradie's wife, for example, could be the tradie herself, is just buried under a mound of paperwork, and that's what it feels like sometimes. So good old GST, tax, pay-as-you-go, withholding, payroll tax if you're big enough, just paying your payroll, obligations, SuperStream compliance. Again, I don't want to get too heavy on technical stuff, but we all must be lodging super via portals these days. You can't just fill out a form and write a check anymore. And there's various mechanisms. So Reckon software, for example, like many others, has a way to automate that. So you just click a button and all of your super goes off to one place and they disperse it to all the different funds. Because as you guys would know, not everyone's in CBUS, for example. They may have come from a hospitality industry when they were younger. Guys have got super funds all over the place these days. TPAR, reporting on your subcontractors. It will go out to other businesses or other industries in time. It's just gone to construction first for obvious reasons. And also managing your bills. So that's part of compliance. So entering your bills in, making sure you're recording the right GST on those bills, making sure it's a work-related bill, or at least appears to be a work-related bill, if I can say that. So what we might have just a quick look at is how easy this can be. So you might go, well, TPAR, I've got to add up what I paid all my subbies, I've got to make sure that it was labour only. If I bought materials off them, that doesn't count, et cetera, et cetera, et cetera. It's just all too hard. So if we just dive in the accounting software, first one is the BAS, the good old BAS. So essentially, if we just have a quick flick through here, as you can see, it's a digital screen. It looks like a BAS worksheet. Just has your total sales in there, other acquisitions. These guys don't have any payroll, which is good. And money you owe, or the ATO owes you, and the money you owe them. And these guys are going to get a nice refund by the looks of it, which is fantastic. Now, all of this data is just pulled through automatically when you enter in your bills in the system. When you do an invoice to somebody, to a customer, that gets recorded here automatically against the income. You don't need to go and retype it. And then with a lot of software these days, click of a button and it's automatically lodging out to the ATO as well. TPAR, again, when this first came out, it was onerous. Not a lot of software systems had put a lot of thought into it. I know at Reckon they spent, I wasn't with Reckon at the time, but because we had a lot of tradies, or Reckon had a lot of tradie customers, they spent a lot of money getting TPAR right, and luckily it was one of the easiest. But my parents had hundreds of subcontractors throughout the year, and you need to report on these guys even if you just use them once, which sounds a little bit annoying. And I guess it is, but it's a government regulation and we need to comply. So essentially with TPAR, if we go in here, this is a reporting period, for example, so that'd be this financial year. And it lists in here all the guys that you've paid, because again, I don't want to be too technical, but you need to have paid the contractor for it to turn up on TPAR, so it doesn't even matter whether you're on cash or accrual. It makes it even more confusing. But as you can see here, we've got Bob's Bricklaying. Gives us an idea of if we've withheld any tax from him, GST paid, which we haven't, he must be GST free, and total amount including GST. But you can see there's also missing information. So this $300 here, again, has been recorded during the year for bills that we've put up against Bob. And then we can just click on Bob's Bricklaying and see the information missing. Which you can see here is we didn't provide his ABN. So if we enter in an ABN here and verify that, there we go, my parents' business, that's a verified ABN, so we can check that as well, which is awesome. So again, software trying to help you comply, making it easier for you, hopefully. And how did Bob's Bricklaying turn up? Was that magic? How did that all happen? If we go into our supplier list here, and Bob should be near the top, if we've sorted in alphabetical order, here he is here. We go into Bob's Bricklaying, and it's as simple as just having a little checkbox saying subject to TPAR. And you can see here it's also given us a warning in his record saying we've ticked him for TPAR, however he doesn't have an ABN. So we need to enter that in, and it's even highlighted the yellow box. So again, the whole premise is helping software, helping us comply. So lastly but not least is more profitable jobs, customers, and hence a business. So what does that really mean? Do we just look at our profit and loss at the end of the quarter and go, yep, that's fine, I've made, what would I like to be making? Let's say $30,000, that's okay. I've made 30,000 clear profit. But does that mean that all of my jobs were profitable? If I did 10 jobs, did I make $3,000, what was that? I'll have to do my mathematics, $1,000 profit on each business. If you did, that's great. You're probably tracking really well. The chances are you probably didn't. And in fact, some of those jobs you probably just broke even or even lost some. And look, that's going to happen. Sometimes we get into jobs that we don't know the full detail. Maybe we were too rushed, we didn't scope it. Maybe there was things unseen. Maybe we didn't do the contract properly and we didn't allow for variations. The list goes on. You guys know better than I do everything that crops up. So looking at the overall, you need to come down to the micro level to actually understand how you went for that particular quarter. And we're lucky, we're in the trades industry, we can actually look at jobs. Other industries can't do that. They have to look at product sales and which product sales are up and down. For us, it's fairly simple. Better data equals better jobs equals better outcome. Okay, and it can be jobs, you can replace that with customers if you have recurring work. You only want to do work for the customers who pay on time and who pay a good price for good work. If a customer mucks you around, doesn't pay on time, is hard to deal with, adds in variations that you didn't factor in, you don't want to do the work for that customer again. So again, it's not a hard premise, but how do you get to that point? And that's the difficult bit. And it is, unfortunately, about data. So the more data that you enter in, the more that you get out. It really is as simple as that. So what are some of the things that you're looking at when you're entering in data? What do you analyze? A great one I always thought, and again, I'll put my parents' business down a little bit here. One thing they didn't do was track where their leads came from. We're paying a lot of money for certain advertising back in the day, and there was no idea within the business whether that was even paying for itself, or if it was, at what margin. And in fact, when we started to analyze this, and it was just as simple as whenever you got a phone call, whether it's on your mobile, out on site, back in the office, on the weekend, you say, oh, by the way, where did you get my number? Where did you hear from me? And you just make a note of that. Or particular software like CRM software, customer relationship manager software, it actually has a lot of lead tracking. Accounting software has lead tracking in it as well, to certain degrees. So what you basically do is look at your profit over the end of the year or the quarter, and you look at where all your leads came from and who was the most profitable and where did those leads come from for those profitable businesses or that profitable work. So if you are paying thousands of dollars, you know, to advertise in some obscure journal somewhere, and it brought you in no work or very little work, that's a fairly easy decision to get rid of that. Now, of course, the argument is I need work, and if it brought in one job, that's better than none. The idea is you want your business to be busy, and at some point you'll be able to cull what's not working for you, or indeed try something else. You know, tracking your leads through the HIA, for example, a key driver. You know, is this tradesman part of an association? Is he a HIA member? Go to High Pages. What were his reviews? You know, where did you hear from me? High Pages. You would be tracking High Pages, going, well, that's really important to me. I make sure my profile's really good. I'm getting great reviews. I'm doing good work. Obviously, it all comes back to. And Google goes into that as well. Newspaper, ask for anything. And then you can look at your lead conversion rate as well. So not a lot of businesses track how many phone calls they got during the month or even during the week. So it's really key to look at how many calls did I get, how many led to a quote, and how many quotes turned into an invoice. It's a really hard thing to do, but if you don't get a job, don't be afraid to call up and ask why. It is a hard thing to do, but it gives you such a valuable insight into why you're missing work. You know, you were too expensive perhaps. People didn't like you. That's probably going to be hard for them to tell you, but you know, the more you do this, you can ask some leading questions and you get a fairly good idea. I know ourselves we were being undercut. It wasn't that we were too expensive. The other offer was just really compelling, and we couldn't match it. So we did some competitive analysis and found out that our nearest competitor had all labourers and a couple of apprentices and just one builder, which was himself. So we changed our whole strategy and went with a strategy of we have qualified tradesmen. Every job has I think it was 3 tradesmen to 1 apprentice ratio, or 4 to 1 or 5 to 1, whatever it was at the time. We didn't actually use labourers a hell of a lot, and we were guaranteeing our quality. And once we started to do that, it turned itself around. So again, we were an isolated case, but that's just an example of asking for feedback, finding out why you weren't getting jobs, and doing something about it. So we could have gone bare knuckles and competed on price, but because we had a lot of tradies working for us, that would have just cost us too much money. We wouldn't have made any money on jobs, and that was not the right way to go. And it was amazing, after we changed our strategy, people would pay for quality, but you needed to explain to them what they were paying for, because a price on a piece of paper doesn't tell the whole story. And in fact, we included a little bit of paper with our quotes to say, this is what you're getting when you use Hollis. And review, as I said, and refine, and review, and refine. Okay. The profit and loss I showed earlier as well. I won't dive into details, we're running a bit short on time, but you can tag particular jobs, definitely in our software, against a project, for example, and then you can run a profit and loss per project. So every bit of expense, every bit of income goes against that project, and then you can isolate it. That's a real basic on seeing how you went for that particular job. And then looking at the types of jobs, so maybe you're a roofer, your colour-bond jobs, you're making a fortune, your tiling jobs, you're not making enough. You're probably charging more for tiling, but maybe you're not charging enough, or you're inefficient. Maybe you've got the wrong guys on the roof, they're scared of heights, I don't know. But it's not just about the job, you know, it's not about the profit, it's about what type of job is it. Can you differentiate one job from another? Which are the jobs I want to do? Because if it is colour bond, then maybe I should just focus on colour bond, or I'll put my tile prices up, so if I get a tiling job, I'll actually earn good money out of that as well, and that's just a bonus. So we are running out of time. I just wanted to leave a little bit of time for questions, but I, of course, Reckon is a partner with HIA, have been for some time now, and HIA, as I said, is close to my heart, so we wanted to give HIA members an offer, just like all the other partners do. We used Caltex for fuel, I think, back in the day, and I hope you still use Caltex. Gary, apologies for that. Toyota, etc., car insurance. So we wanted to offer HIA members 3 months of our software, especially if you're not using software at the moment, or using spreadsheets, or you're using books. You know, pen and paper is just a good idea to jump in and, you know, have a play. But as I said, today's not about software, it's about just opening your eyes to how using software can actually make this stuff easier for you to make better decisions. So what do Reckon do? Obviously we do software. This is our little tradie sort of pack, which is really cheap and starts at $5. I think my brother's on the $5 one plus invoices for $8 a month, and he can invoice out in the field, tracks all his expenses and bills. He loves it, and it's nice and simple. Fortunately, I still do his bookwork, so that's the only thing we haven't solved, but I'd love to get him through to that at the end of the day. But it's not all about software these days, and we've actually seen a nice little niche in the market, which has been great for us, which is business loans, funnily enough, and providing short-term loans to businesses. So again, it comes back to that cash flow. Again, it's not about using Reckon, but it's about looking at these alternatives to cash flow. So if I do have cash flow issues, how can I say, maybe I can't afford my BAS, can I get a real short-term loan, competitive interest that I can pay back fairly quickly just to get me out of trouble? So, if you're getting brick walls against the bank, I think about 24% of businesses with up to 2 employees find it hard to get money. It's a lot simpler these days. Look around. So that's the end of our presentation. I hope you got a little bit out of it. It's really hard in 50 minutes to give someone a whole business synopsis on some of the things they should be looking at. But I'll take any questions now, Kerry, if you've got them.
Yeah, thank you, Jason. And I didn't realise that Reckon offered those loans. That's fairly new, is it, to your suite?
Yes, we started it late last year. We partnered with a fintech startup, they call them, so a digital disruptor in the finance world. And I think in the first 3 months we funded $1 million worth of loans, and then in January we funded $1 million worth of loans. So it's definitely ramping up and becoming quite popular. And people are using it for paying their BAS, paying their employees just on a month because a client didn't pay their invoice on time. It's about not locking you into, I guess, 3-year loan. It's about getting some cash quickly to help you out. But there is a rigorous process around it in terms of making sure you're financial. And in the future, this stuff will be just linked into your data. So you'll go, I want a loan. I use Reckon, for example, and it'll go in and automatically check your finances and go, yep, you're approved. So it is about disrupting, dealing with those financial institutions that are slow to move and also not real keen to offer loans, short-term loans to people.
Okay, I definitely learnt something today. And we talked yesterday about, some of the I guess, measuring that businesses need to do to make sure that, I guess, not only that they're performing, but you did touch on measuring where their leads were coming from or keeping a track of that. So, and you said that you can do that in the software?
Yeah, so it depends what software you've got. Accounting software does things like BAS and, manages your invoicing and everything tied to finances. But there is a plethora of, well, I guess we call it in our industry add-ons, but apps that are really specific to what they do. And a lot of those, so CRM, which is customer relationship, they tie back into accounting software. So whatever software you're using, there's more than likely 1, 2, 3, 4, 20 CRM add-ons that connect in, and that way you're not duplicating your data. And it's really good at tracking leads. Where did that lead come from? What stage is am I up to with this lead? Have I converted them into a customer? So again, it is all about data, Kerry, and the more effort you put in, the more you'll get out of it. But if you don't ask the question, where's my lead from, you're behind the 8 ball straight away.
Yep. Kate has asked, any suggestions for a job management system / program using Reckon hosted for a small to medium plastering company?
Oh, putting me on the spot. Yes, there's quite a few. Hosted, again, without getting too technical, is our desktop product, and we've only released the tool to connect to it in the last few months. So we've got to give developers time to catch up. But maybe if you send me that lady's email offline, I can let her know the guys that are working on it right now. There's one out of New Zealand called Ostendo. There's one out of Victoria called Arrowflow, AROFLO, and they're pretty close to getting it over the line, but we're also working with some, depending on what your needs are, some smaller job costing apps as well that are quite lightweight and inexpensive. So I can give more detail. But ourselves, we have 650 add-on partners. Our competitors are very similar to that. So there are so many add-ons out there now to really give you a niche, I guess, or a niche application to track one particular thing. So whether that's job costing or tracking your leads, etc.
Okay, and Angie's asked, what benefit would you suggest that Reckon One Cloud would have over Reckon Accounts Premier Contractor?
Yeah, that's a good question, and we get asked that all the time. Obviously, there's competitors in the market, and as I said, I'm a previous bookkeeper, so I've used everyone that's around. We're in a unique position because we've got a cloud app now, but we've also got traditional desktop. Again, without making it too much about Reckon today, the cloud one's really lightweight, it's fairly nimble, it's fairly cost effective, and it has a bit of automation around getting bank feeds in and automating your transactions so you don't have to do them manually. And again, a lot of our competitors have that same thing. So, not just talking about us in isolation, but the cloud in general. It's typically around giving you some mobility. So most of them come with an app, as does ours. So guys out in the field can enter in their time, they can enter in invoices, they can enter in expenses, they can enter in bills out on the road. Some apps do more, some apps do less, and you can log in from anywhere, so just like internet banking. So that's been the real driver to the cloud. If you're on a desktop product, and Reckon Desktop is an example, it's got 30 years of development behind it, so it's fairly meaty in what it will do. And in fact, we ran our whole construction business on Reckon Accounts Desktop. The reporting's fantastic, the job costing's pretty good, but it gives you the ability to enter in all this data that you can manipulate in other areas. So cloud's not going to give you that. No cloud app's going to give you that, and that's why the add-on ecosystem's been so important for cloud apps, because they are fairly lightweight in themselves and what they'll do. But you use an add-on to kind of give you an extension of that data. One thing I should mention though, which is key for cloud, now again, not all of our competitors do this, a couple do, but cloud is generally unlimited users. So if you get a cloud app, you can essentially, so for Reckon One, for example, if you just wanted an app to do invoicing like my brother, it's $8 a month, no matter how many invoices he does, no matter how many employees he has using the app. Timesheets is a great one. It's $3 a month, unlimited employees. So you could have 50 guys entering their time. It's $3. Payroll starts at $3. So it is a lot cheaper, and because it's cheaper for software vendors to do, they can put multiple people on it for no more cost. So that's one of the real benefits for cloud. So I'd really, if you're coming from desktop, no matter who you're on at the moment, really look at the benefits of that product, because it's probably really advanced and does a lot of really nice stuff. Weigh that up versus, why do I need to go to the cloud, or why would I go to the cloud? And we're going to do some really cool things this year where we're actually going to tie our Reckon One product into our desktop and hosted products, so you can use, for example, Reckon One timesheets out in the field and push that back into Reckon Desktop back at your office. And we kind of haven't done a good job of connecting the two together at the moment. One is in isolation of the other, but it just makes sense to us because a lot of businesses just want to do time on the road or invoicing, and they don't need to have a full accounting package out in those areas. So why we've got the tools, why can't we just add them all together, if that makes sense?
Yeah, and just going back to all those apps, we've chatted about that. You've been on previously, haven't you? And you've talked about some of the apps that you can add on to the systems, and I guess that's increasing all the time. Is there any sort of, I guess, trends that you're seeing out there that where we're headed? I guess definitely getting
Yes.
paid on the spot is definitely a everybody's going to be doing that shortly, but
Yeah, definitely. So the trend is around finance. So it's getting bank data into your system so that you can see it on a daily basis and make a decision about it. That part of it's really interesting because we're moving to artificial intelligence, but I don't mean robots. What I mean is more machine learning. So what that means is out of all the HIA members, for example, if they were using cloud software, we would say, you know what, whenever they get a bill from Caltex, 99% of them enter that as a fuel bill. So we're going to use machine learning and just make it a fuel bill. Now you can go in and change that later, but chances are it's pretty right. In fact, the industry's done some analysis and they've found it's more accurate than a bookkeeper. So that's where we're moving in that space. So machine learning so that you don't need to reconcile a bank account. It'll just reconcile for you. It'll give you a good idea of where all your expenses went. But we're quite a way away from, you go to Bunnings, they say, what's your job number? You say Mrs. Smith. You know, the bank has none of that data. So we're still away from, you know, if you want to job track and cost things, then there's still a bit of manual effort. But that's manual effort for now. Who knows, one day we might be hooked into the Bunnings computer system and that job just comes through to our system as a bill. The ATO is doing a lot of work around what they call the e-invoicing initiative, which is something I didn't talk about. So that means in the future, a bill from any system in Australia needs to be able to come straight into software from anyone else. So a bill from Bunnings needs to be able to come into Reckon 1 as a bill and enter itself. So at that point, yes, we can start automating even more of that. And yeah, sorry, Kerry, the mobile payments, definitely being able to take more payment types, Apple Pay, Google Pay, you know, all that near-field technology. Having a dongle to swipe was never great because, you know, tradies are like, oh, I have enough trouble keeping my phone in order, let alone having a dongle along with it. So a lot of it is moving to using the in-house sort of phone technology, and that's probably the trend. Sorry, I'm talking fast. I know we're just about to run out of time, but the trend is doing more on mobile. We've been playing a lot with Google Assistant. Well, I have because I'm a Google user, but with Siri for mobile. So I don't know if anyone out there's tried talking to Siri lately. She's not that great sometimes, but they're doing things like, is it going to rain today? Yes, it is. You need an umbrella. But in the future, we'll be able to talk to our phone and say, create an invoice for Mrs. Smith, tiling $400, and it'll just go away and do it. So at the moment, I guess the big thing for me is technology is in some ways making us do more. The next leap is having technology do some of the thinking for us, so we just don't have to worry about it. My big dream is that your car will talk to your mechanic and book it in for an appointment based on your calendar and just send you a notice saying, I've picked this day, do you agree, yes or no? That's the utopia for me. And the technology is there to do it, but it just hasn't happened yet.
You'll be doing away with people soon.
Yeah, they'll move to other industries, that's for sure. People said that about manual labour all down the chain, and they just moved into other industries.
Yeah, that's true, definitely. Yeah, we have hit the 2 p.m. mark here on the East Coast, so unless anybody else has another question, I will wrap it up and thank everybody for joining us today, and thank you, Jason, for sharing your tips with us today. As I said earlier, we'll be recording this and saving it onto the website, and I have mentioned if you need CPD points, for those people who know what CPD points are, please just let me know via email. If you send me your member number, I can organise to have that put on your online diary, so keeping it online as well, so always handy. So thank you everybody for joining us. Thank you, Jason. I hope, sounds like the rain stopped here. I hope the weather gets better for you as well.
It stopped here as well. Thank you, Kerry, and thank you everyone for joining us today. It was a pleasure.
Thank you. Bye.